If you own crypto and you've ever used more than one exchange, what I'm about to show you should genuinely concern you. The IRS is now sending a form during crypto audits that lists over 100 exchanges and wallets by name and asks you to go through every single one. Check yes or no, provide your usernames, your email address, the date you first used it, and then sign it under penalties of perjury. I've been defending crypto tax audits for over a decade. I've seen aggressive examiners, I've seen the IRS miscalculate gains by 6 figures. But this form, it might be the single most aggressive tool I've seen them deploy against individual taxpayers. What is this thing? Let me show you exactly what it says, how the IRS is using it, and why you need to understand this, even if you're not being audited right now. I run Gordon Law Group out of Chicago, and we've been focused on cryptocurrency tax work since 2014. That's before most people had even heard of Bitcoin. We handle IRS crypto audits, appeals, and tax controversy work nationwide. And I also teach a law school course on emerging technologies. So I'm paying attention to how regulators and enforcement agencies are adapting to the space. I'm telling you all that because what I'm going to walk you through today isn't speculation. This is based on a form we obtained from active IRS examinations, real audits of real taxpayers, and I think every person in the crypto space needs to see it. So let's start with the basics. The official title is the List of Digital Asset Platforms, Wallets, Services, and Products Used, and it's specifically for individual taxpayers. Now, this is not a publicly numbered IRS form. You won't find it on irs.gov, and it's not like a 1099-DA or a Schedule D that has a form number. This is an examination document, an attachment that an IRS revenue agent will send as part of an information document request during active crypto audits. The copies we obtained came with cover letters, giving taxpayers roughly 4 weeks to complete it, sign it, and mail it back in a return envelope. 4 weeks to account for your entire cryptocurrency history. We'll come back to why that timeline is a problem. But first, let me walk you through what's actually on this form, because until you see it, you won't fully appreciate how expansive it truly is. Part 1 of the form is a pre-printed list of cryptocurrency exchanges and trading platforms. And when I say list, I don't mean 10 or 20 platforms. I mean over 100. Let me read some of these so you get a sense of the scope. Coinbase, Binance, Binance US, Kraken, listed under its legal name Payword Interactive, Gemini, Bitstamp, Bittrex, Bitfinex, KuCoin, Gate.io, OKX, Poloniex, Robinhood, Cash App, listed as Block Inc., formerly Square, and I'm still going. FTX, Celsius, BlockFi, Mt. Gox, BitMEX, Mexi, Hyoboi, known as HTX, Crypto.com, listed under its legal entity name Forest DAX, Paxful, Changely, Shapeshift, Uphold, Hotbit. And I'm skipping dozens more. The list goes on for 2 full pages of small print. Now, here's what you have to do for every single one of these. For each platform, you check yes or no. Did you use it? If yes, you provide the date you first used it, any usernames, email addresses associated with your account, and there's a comments column if you left anything out. And at the bottom, there are blank rows labeled Other Platform, because the IRS knows this list of 100+ exchanges still might not cover everything. But here's the detail that makes this really aggressive. The form specifies a look-back period. In some of the versions we reviewed, it asks about your activity from the time you first engaged in digital asset activity all the way through 2024. That's not just the tax year being audited. That is your entire crypto history. If you bought your first Bitcoin in 2013, they want to know about every platform you've touched between then and at the end of 2024. Think about that for a second. Can you remember every exchange you signed up for over the past decade? Every platform you created an account on to buy some random altcoin during the 2017 ICO boom? Every exchange you used once because it was the only place that listed a specific token? Most people can't, and that's exactly the problem. Now let's look at part 2, because this is where the IRS shows that they're paying much closer attention to self-custody and DeFi than most people realize. Part 2 shifts the focus from centralized digital exchanges to wallets, DeFi tools, and self-custody solutions. The platforms listed include MetaMask, Exodus, Garda, Electrum, Mycelium, Coinbase Wallet, which is separate from the Coinbase exchange, Trust Wallet, Crypto.com, DeFi Wallet, Zengo, KeepKey, Trezor, and Ledger. And again, blank other rows at the bottom. For each one, you disclose whether you used it, when you first used it, which blockchain networks you used it on, and a brief description of the digital asset activity you conducted with it. If you've ever used MetaMask to swap tokens on Uniswap, if you've ever bridged assets between Ethereum and Arbitrum, if you stake tokens through a DeFi protocol, if you've minted an NFT, or if you hold crypto on a ledger in your desk drawer, the IRS is now asking about it. The days of assuming that self-custody and DeFi activity are invisible are over. They might not be able to trace every on-chain transaction yet, but they're asking you to tell them about it, under oath. And that brings us to part 3. This is the part that should get everyone's attention. Part 3 is a certification. It requires the taxpayer and the spouse, if you're filing jointly, to sign a statement that reads, I have read the foregoing statements consisting of 2 pages. Under the penalties of perjury, I declare that I've examined these statements and to the best of my knowledge and belief, they are true, correct, and complete. Under penalties of perjury, true, correct, and complete. Now, I want you to really sit with what that means in practice. You're being asked to perfectly recall every crypto platform and wallet you have used, potentially going back 10 or more years. List them all, provide account details, and then swear that you haven't missed anything. This is not a casual information request. This is a sworn statement. If the IRS later determines that you failed to disclose a platform, even one you genuinely forgot about, you've signed a document that they can hold against you. And here's what makes it even more dangerous. Some of these platforms change names. Crypto.com used to be Monaco, and the legal entity is Forest Dax Inc. Kraken's parent company is Payward Interactive. Cash App's parent is Block Inc., which used to be Square. If you don't recognize the legal name on the form, you might check no for a platform you actually used. Some of these platforms are also defunct. FTX is gone, Celsius is gone, BlockFi gone, Mt. Gox has been dead for years. And are you supposed to remember your username for an exchange that collapsed in 2014? And yet the IRS is asking you to certify completeness under perjury. I don't use this word lightly, but this is a trap. So why is the IRS doing this? What's the actual play here? I've thought about this a lot, and I've discussed it with other practitioners who are seeing this form in their cases. Here's what I believe is happening. Number 1, cross-referencing against data they already have. The IRS has been issuing John Doe summonses to crypto exchanges for years. Coinbase in 2016, Kraken in 2021, Circle, they received 1099K and 1099B data. Starting in 2025, they're also getting 1099DA from brokers. They have contracts with blockchain analytics firms like Chainalysis. So when they send you this form and you check no next to Kraken, but they have John Doe summons data showing you had an account there with $50,000 in transactions, now they have a sworn false statement from you, and that changes the complexity of the audit. Number 2, building a complete transaction map. This is the big one. Crypto traders move assets constantly between exchanges, to wallets, through DeFi protocols, across chains. On-chain analytics can trace some of this, but not all. The IRS can see that 2 Bitcoin move from one address to another, but they don't always know who controls these addresses. This form asks you to connect the dots for them. When you disclose which exchanges and wallets you used, you're essentially giving the IRS a roadmap of everywhere your crypto has been. You're linking your identity to addresses and accounts across the entire ecosystem. Number 3, identifying unreported income and hidden assets. If you disclose a platform that doesn't appear anywhere else on your tax return, that's a new investigative lead. Maybe there are gains on that platform you didn't report, maybe there are assets sitting there. Every yes you check potentially opens a new line of inquiry. Number 4, creating leverage for penalties and potential criminal referrals. A signed perjury certification raises the stakes of every discrepancy the IRS finds, before or after you submit the form. If they later discover an account you didn't disclose, they don't just have an unreported account. They have a signed sworn statement that you said it didn't exist. That's the kind of evidence that supports fraud, penalties, or even gets to a criminal investigation. And that's why I call this a trap. The IRS is using a civil audit procedure to generate sworn testimony that can be used against you in ways that go far beyond the audit itself. Now, some of you are probably thinking, okay, so what are my options? And the honest answer is that this form creates a real catch-22. Option 1, you fill it out completely and accurately. Great, but now every platform you disclose becomes a target for further investigation. The examiner can issue summonses, request transaction histories, and potentially expand the audit scope. Option 2, you fill it out but miss something. Genuinely, accidentally, now you signed a perjury certification on an incomplete document. If the IRS later discovers the omission, your credibility is shot and your legal exposure just increased significantly. Option 3, you don't respond. That's generally not a great move during an audit. The IRS can issue a summons to compel the information. They can propose adjustments based on their own records, which are almost always less favorable to you. And non-cooperation can support the assertion of additional penalties. None of these options are great if you're going at it alone. Every one of them has real risk, and that's exactly the point. This form is designed to put the taxpayer in a position where there's no easy answer. So let's talk about what you actually do, both if you receive this form and if you haven't. If you receive this form, step 1 is do not sign it without talking to a crypto tax attorney first. I can't stress this enough. You are being asked to make a sworn statement. That is testimony. You would not walk into a deposition without a lawyer. You would not sit for a police interview without a lawyer. So do not sign a perjury certified IRS document either without one. A tax attorney can review the form, advise you on how to respond, negotiate the scope of the request, and communicate with the revenue agent on your behalf. And critically, communications with your attorney are protected by attorney-client privilege, which does not apply to accountants. Step 2, reconstruct your crypto history before you respond. Before you check a single box, do the work. Log into every exchange you can still access and pull your records. Search your email. Go back years. Search for things like verify your email, welcome to, account created, deposit confirmed, and the names of exchanges you can remember. Check your password manager. Check your old phones. Use blockchain explorers to trace wallet activity. If you use crypto tax software like CoinTracker or CoinLedger in the past, pull those records too. The goal is to build as complete a picture as possible so that when you do respond, you're responding from a position of knowledge, not guesswork. Step 3, understand the scope question. Your attorney can and should evaluate whether the IRS is entitled to a lifetime history of your crypto activity when the audit covers specific tax years. There may be valid grounds to push back on the scope of this request, and that's a legal argument, and it's one your representative should be making on your behalf. Step 4, request more time. 4 weeks is not enough to reconstruct 10 years of crypto activity. Consult with an attorney and prepare a response to a perjury certified document. Revenue agents routinely grant extensions on IDR deadlines. Your representative should request one immediately. Step 5, don't ignore it. I know I just spent this whole video telling you how dangerous this form is, but ignoring it is worse. Non-cooperation during an examination leads to summonses, adverse inferences, and adjustments based entirely on IRS records, which almost always overstate your liability. The right move is to engage, but to engage with proper representation. Now, and this is important, even if you're not currently under audit, this form tells you a lot about where the IRS crypto enforcement is headed. First, start building your records now. Create a master list of every exchange and wallet you've used. pull transaction histories and CSVs while you still can. Some of these platforms, they're not going to exist forever, and when they disappear, your records go with them. Second, do not assume DeFi and self-custody are invisible. The IRS is explicitly asking about MetaMask, Ledger, Trezor on this form. They know people are using these tools. The question is not whether they'll ask, it's when. Third, take the digital asset question on Form 1040 seriously. If you check no on that question, but the IRS later sends you this form, you've created an inconsistency between your tax return and your examination response. That's not a position you want to be in. And fourth, if you have unreported crypto activity from prior years, talk to a professional now. The window to proactively fix things before the IRS finds them is closing. With 1099-DA reporting now in effect and forms like this being deployed in audits, the IRS's visibility into crypto activity is increasing rapidly. It's always better to come forward than to be caught. I want to end on a broader point. I've been working in this space for over a decade. I've seen the IRS go from sending vague warning letters to deploying sophisticated blockchain analytics and examination tools like this form. And I understand that the agency has a legitimate interest in tax compliance, but there has to be a line. Sending a Perjury certified questionnaire that covers a decade of activity during what's supposed to be a civil examination goes beyond reasonable enforcement. It treats every taxpayer like a suspect. It penalizes honest mistakes, and it puts people in a position where cooperating with the audit can create more legal risk than the underlying tax issue itself. That's not how it should work. And that's why I've been going to Washington to advocate for changes in how the IRS handles digital asset enforcement. Taxpayers deserve clear rules, fair processes, and the ability to resolve their tax obligations without walking into a legal minefield. I'm going to keep pushing for that, in DC, in the exam room, and right here on this channel. If you've received this form or any IRS notice about your crypto, don't try to handle it alone. Reach out to us at Gordon Law. We handle crypto audits nationwide. The link is in the description. We were one of the first to break down the IRS digital asset examination form, and will continue to be on the front lines of this. So please like, subscribe, and share to keep up to date with developments like this as they happen. And if you've seen this form or have already been contacted by the IRS about your crypto, leave a comment below. I want to hear from you. Lastly, if you know someone in crypto who needs to see this, send it to them. This is the kind of thing that can save somebody from making a very expensive mistake.